Hi, Jasmine here from Redwood Financial, and this week's frequently asked question is, what does the latest jump in inflation mean for my investments? That's a really good question, and obviously on the short-term data looking at inflation figures, of course they can jump up quite high, and it is over the medium to long term that we need to really worry about inflation. And certainly, obviously, what we've seen is, despite much more cautious expectations at the start of the year, strong vaccination rollouts and a strong recovery on the back of the COVID pandemic, especially in Western economies here in the UK and the US, for example, with the strong fiscal support that we've seen from central banks and governments, means that inflation is running higher than we were necessarily expecting. So what does that mean for your savings and investments? Well, generally, the relationship between inflation and the stock market is quite intrinsically linked. And when we see times of higher inflation, we do tend to see the equity market perform stronger. And the downside of that is that those clients who are invested in safer areas, for example, bonds, will start to see lower yields and returns from those. So certainly, I think as an investor, you're going to be rewarded for taking more risk and investing more in stocks and shares in a high inflation climate. For those of you that are sat with cash in the bank, of course, inflation increasing means that actually in real terms, you're losing money by having that money sat in the bank, not actually growing even above inflation rates. And so there is a real risk for those clients who hold high cash levels that they are going to start to experience losses as we see inflation creep up in the months and rest of this year. Now, what can we do about that, and what does that mean? Well, as I say, it's really about the portfolio construction. And as I say, at the moment, a lot of our fund managers are favouring stocks and shares and moving it more into the equity market and coming away from bonds. Just looking at the yields on those, it doesn't stack up with a good return on investment. And so understandably, they're going to put more towards stocks and shares to make sure that a good return over and above inflation is delivered. The downside of that, though, is, of course, we are taking more risk, the more money that we have invested in stocks and shares, whereas bonds provide us a nice safe harbour for some of our money and a bit more of a predictable return and yield. So, of course, the challenge now for fund managers is to make sure that they're able to continue to deliver above average growth, which is going to go above inflation, but to do so in the safest way possible. And for that, it all comes down to diversification. Diversification, not just around asset class, but also globally around the world, making sure that we're investing in different economies, but we're also investing in different sectors as well, whether that's energy, pharmaceuticals, the service sectors, manufacturing, technology, design. So really, that is the most important thing, that your portfolio is diversified, and that's the only way that we're going to continue to see above average performance, which is going above inflation and making sure that you're not losing money in real terms. So I think that's a huge thing to bear in mind. As I say, the inflation on a month by month and a quarterly basis, it can peak up quite high, but I think at the moment it looks like we're on track to probably still see inflation sitting at around 2.5% for the UK and the US by the end of the year as well. So whilst it has had its months where it's gone higher than we would have liked, I think overall it's going to balance out very close to, if not on target, with what most central banks are aiming for amongst Western economies. And it will be nice, obviously, to start to get back to a decent level of inflation. And hopefully we start to see some of that come through in some of the interest rates being offered on cash deposits as well. But I wouldn't hold my breath for that. If you want to chat to and have a bigger conversation about investment strategy, how inflation affects the value of your money, and what you can do to make sure that you're not losing money in real terms when it comes to inflation, please just give the office a call. We'll book in a 15-minute complimentary telephone meeting with one of our advisors, or visit our website. We've got lots more blog articles on this subject, and you can also just send us a quick contact form and we can answer any questions that you have. So thanks for listening to this week's Frequently Asked Question. I look forward to answering more frequently asked questions in the next week to come.